why don't you share with us what are you seeing now? What a great investment in fintech is looking like now in this context of AI and reducing costs through AI. So, what is that cool, good, profitable investing in fintech today?
And hi everybody, hola a todos, bienvenido. El año, vamos a hacer en español el año que viene. Maybe I'll just introduce myself a little bit because it'll be useful context. I'm Kenyan, so I have nothing to do with LATAM in theory, although LATAM is the new world, so everybody's welcome in LATAM, like the US.
Right.
People don't call LATAM the new world, but it is there. I was at SoftBank for many years and doing tech investing in San Francisco for many years, and then I got obsessed with LATAM because there were great founders and big markets and no capital in 2018. And so since 2018, the first investment we made was in Clip in Mexico at SoftBank. We set up a separate fund just for LATAM. And from 2018 to 2022, I led the SoftBank Latin American Fund, which invested across the region, truly, from Argentina to Mexico, in all kinds of categories, and we had a massive team. But then SoftBank's priorities changed, and I still wanted to finish the story that we had started in LATAM, which is great founders, great markets, big problems to solve, not a lot of capital. So I launched Bicycle Capital with my business partner, Marcelo Claure, who is Bolivian, except he's 3 times the size of the average Bolivian. And Bicycle Capital is focused on high quality growth stage companies. So we're not a venture capital fund, we're high growth stage, so Series B and later all the way through to IPO and beyond. Growth stage companies in Latin America. And the other thing we do is we also bridge AI into LATAM. This wasn't a topic when we launched the fund in 2023 or when we left SoftBank in 2022. But now it's a topic. I mean, every conference I've been to, it doesn't matter what the topic is, it's about AI. The whole world is talking about AI. And so we have to be relevant in AI, and LATAM has to not be left behind in AI. And so we try to bridge Silicon Valley to LATAM, as well as finding high quality growth companies. So that's what Bicycle Capital is all about. And to your question, I mean, one of the untold stories about LATAM, and I don't know why it's not more told, is Latin America is the world leader in financial services innovation. It's not even close. The number of companies that have been built, that have been acquired, so a lot of them from Brazil, but even Mexico and Argentina, whether it's Technisys or Pismo or Arcos, bought by SoFi and Visa and MasterCard. I mean, these are like serious buyers. High quality technology platforms, so that's one category. The other category obviously is the fintech, B2C, B2B fintech, like Nubank is the most obvious example, but there's several others coming in Mexico, in Brazil, in Colombia. The best fintech in the world is Nubank. And then the third category is just government innovation around financial services, whether it's regulation that's pro or the government actually building technology. The famous example obviously is Pix, but Breve and Cody and all of these things will happen, and open banking will happen. So Latin America is the world leader in financial services innovation, and nobody tells that story well. So I think that's one story that should be told better. 25% of the world's fintechs, by our estimate, I mean it's a rough thing, who knows exactly, it could be 30, it could be 33, but it's in that range of fintechs in the world are from Latin America. So there's a really wonderful ecosystem, a world-leading ecosystem around financial innovation happening in LATAM, which is one of the things we continue to be most excited about. And to answer your question, the simple way is to go find a fintech to invest in. But we actually prefer to find companies where fintech participates in the company, but it's not the main dish. You know, it's the ketchup, it's not the burger. Because often the problem with just pure financial services is acquiring and retaining customers, unless you're doing massive credit, and then that's a whole other problem. Building a credit business is very tricky. So more important is to be able to have customers already, and then offer the good ones credit, and offer the good ones financial services. So we like embedded financial services, and every investment we've made so far has an aspect of embedded financial services, whether it's Motu in Brazil that rents motorcycles to couriers. That's already a financial service. It's an asset. And then also offers those couriers loans and payments. Whether it's Cayena that does B2B food distribution, it also offers payment terms to restaurants or distributors. Whether it's the third company that we haven't quite announced, but is in the trucking business and helps to offer financial services to truck drivers. All of those have financial services embedded in them, but very naturally, very much like water. So that's something we're very excited about.
Okay. So I think you touched into several points that I believe that are extremely relevant. I think we saw a fantastic first wave of fintechs in Latin America and the Caribbean, right? Targeting pain points like payments, wallets, digital banks, you mentioned Clip and so on, and now we are seeing this second wave, and you're talking about embedded financial services. But isn't that everything and anything?
It could be. In the US, it's not. So I think one of the big mistakes, I think we've made two big mistakes in global venture. The first is assuming you should build businesses the way they're built in the US, everywhere. The second is assuming you should fund businesses the way they're funded in the US, everywhere. So people just copied the model of building, and they've copied the model of funding, and tried to do that everywhere in the world. And it doesn't quite work, because the venture capital model only works when you have massive number of companies, all of which can become huge, and a deep portfolio. And a bunch will go to zero, but several will outperform. If you have a shallower market, you can't copy that because you don't have the same N. You have a much smaller sample size. And so you actually have to be much more selective about applying capital. You have to expect more companies to succeed, but maybe they won't succeed as much, but the percentage will be greater. You have to abandon the word unicorn, which I think is the most toxic word ever created in this business. I like to tell people when I was a banker in San Francisco in 2012, the bread and butter of the ecosystem was $200 to $600 million exits. Sales, exits. Nobody cared if you were worth $1 billion privately on paper and never exited. It was irrelevant. People were selling companies, money was going back into the ecosystem, people were starting more companies. Somehow, we don't think that's special anymore. And everyone would rather be a unicorn on paper than a $300 million exit. That makes no sense to me. And I don't think it's a healthy way for any ecosystem to run. So my encouragement would be everyone stops using number of unicorns in my portfolio, number of unicorns in my country, number of unicorns in my ecosystem as a metric. It doesn't mean anything. Instead, who have you sold to and generated liquidity from is a much better metric. So a lot of opportunity across the board, but you can't just copy paste the US model. And embedded financial services can be everything, but that's kind of a new idea. It's an old idea in LATAM, and I think people are coming back to it. Mm-hmm. But in the US, people still don't quite understand it.
Got it. But for example, in LATAM, and this is a problem that we face on a daily basis, right? If you have an entrepreneur who has developed a business, and now the idea is, okay, we're going to scale it with embedded financial services. How do you evaluate or assess that entrepreneur that has built a model that has a very different expertise than embedded financial services? How do you evaluate that entrepreneur is going to be able to develop those services and grow that company?
Yeah, I mean, you're asking the billion-dollar question. Who's heard of Guia Bolso? It was this famous company in Brazil at some point in 2018. And they said, let's just add fintech. Or Stone, another Brazilian company, a merchant acquirer for mid-market merchants, and they said, let's just start lending to our base. Both of them blew up. I mean, Stone is still around. They're a publicly traded company, but it was a huge disaster, almost destroyed the company. Credit is like taming a lion. The lion wants to kill. And so if you're taming the lion, you have to be really, really skilled at taming lions, because in most cases, the lion is just going to kill you and eat you. So we're extremely careful about this promise that no, we'll do this and then we'll be fintech. You have to see the proof, and it's a very different DNA. The magical thing Nubank did, that I don't think any other fintech in the world has done, was they managed to match growth, hyper growth, with credit DNA from day one. Almost all fintechs in the world, Revolut is the other huge example, they still don't lend. They don't lend. But they know how to grow. They know how to grow transactionality and usage and debit cards and all of this stuff, and they're a channel for other people. Only Nubank managed to grow and lend well at the same time, which is two different DNAs, because it's easy to grow by lending, but you grow very poorly and you can destroy the company. And it's easy to be very conservative when you lend and not grow. And most companies fall in one of those two paths. So it takes a very particular combination of things, and it's not straightforward. However, the advantage of having embedded financial services is ideally you have one business that already works well. And for the best customers, you offer more financial services, the ones that you know are a good risk. You're not trying to grow with the financial services, you're trying to increase ARPU with the financial services. So you have a big base, and you can keep growing that base without lending. And for certain sub-cohorts, you try to drive up ARPU with financial services. That's the way we think about it.
Got it. And let
ARPU is, it's average revenue per user or monetization per user or whatever. I think Nubank called it RPAC, average revenue per active customer. Many ways to call it.
So let me work it the other way around. What about those medium to large companies, traditional financial intermediary that want to tackle a new sector? What do you think, or have you seen any trends regarding the acquisition of the startups that are working in a different business model but that can actually create a line of embedded financial services? How successful is that strategy?
For whatever reason, M&A, local to local M&A is extremely rare. Extremely rare. And I get it. You know, you're a patriarch, you've built your traditional bank, financial institution, it's running very well, it has a retailer next to it, you issue dividends every year to your shareholders, and some startup comes and says, I'm worth $1 billion. And you say, no, you're not. And you can't agree on price, and that's the end of the discussion. Again, it's part of the cancer of this whole unicorn thing. So there's always this price mismatch. I'm not sure how to solve that. But whether it's with financial services or with AI, both of which are things you can add to a good business to make it better, I think there's an extraordinary opportunity for existing, large, well-run, family-owned businesses across Latin America. Because we are now, just to change the discussion to AI a little bit, we're in an age where intelligence is getting free, and the cost of building products is approaching zero. It's just like plugging, the way you plug something into the wall, electricity comes out. Soon we'll be plugging things into the wall and intelligence comes out. And as a result, it's not hard to build products anymore. It's not hard to build analytics anymore. It's not hard to have engineers anymore. You can have 1 million engineers. What is hard is distribution, especially distribution that involves physical touch points across multiple parts of the country. So we're very interested in this idea of finding the old entrepreneurs, not just the young ones, the old founders whose businesses have really strong distribution, and where you can sprinkle in technology in the right way if the founder is motivated to do it, because it requires top-down mandate. We're going to be an AI first Falabella, or we're going to be an AI first, pick your whatever company you want to put there. And if you can drive it top-down like that, I think there's some incredible value to be captured. You could increase your revenue growth, increase your margin, and increase your multiple. 3 levers through applying AI. And part of what we're now excited about in the next couple of years is finding those opportunities, not just the young founders, high growth, venture capital style businesses, but also these older founders. We like all kinds of founders, young or old, it doesn't matter. But we like founders, why? Because They are decisive and they drive direction with authority in a company and can make things happen. That's what's special about a founder versus a manager. A manager tries to keep things the way they are. A founder is willing to drive change, and so it doesn't matter if they're a new founder or a founder from 30 years ago, as long as they have that mentality. We want to find some of those companies to invest in. And the beautiful thing about that is if you're just looking for venture capital businesses, you'll focus on Brazil and Mexico, plus or minus. But if you're looking for some of these interesting larger companies with founder mentality that want to drive transformation through financial services and AI, suddenly you can look much more broadly. There are companies that can be transformed from Santo Domingo to Santiago, from Montevideo to Monterrey, and it really opens up the continent in terms of investment opportunities.
Super interesting. And related to that, and related to valuations and the fundamentals, we have seen a peak of valuations in fintechs in 2020, 2021. We have seen a correction in the market in the last couple of years. So where do you think we land now with AI? Are we back to fundamentals in terms of valuation?
Actually, yes. So I would argue, this is a big debate, so don't kill me, that the market is actually in a very healthy place. I don't think there's a bubble. Why? Because we're all talking about it. A bubble is when you don't know there's a bubble. Like everybody's obsessed with the fact that there's a bubble. In the telecom boom, a lot of spending was on fiber, using debt to put fiber in the ground, and the fiber was never turned on. It was called dark fiber because it was never turned on. So when you match debt with dark fiber, you get the internet bust, which is really a telecom bust. Right now, you're not using debt. It's all cash flow from big balance sheets of Google and Microsoft and Facebook. These are the most cash flow generative businesses that have ever existed. And there's no debt involved, or very little. And there's dark fiber, but there's no such thing as a dark GPU. All of the GPUs are being used. They're being used so much that they melt. So it's a very different dynamic. And the companies we're seeing in AI have a real revenue that's growing incredibly fast. It's wrong to just say this is 1997 or 8 or 9 and we're the same. That's just a very lazy way to frame it. So companies are generating revenue. You can argue about long-term margins of these companies. That's a totally fair discussion to have. But what's real is the usage and the value and the infrastructure is being used as it's being built. And in fact, there's a shortage of everything from turbines to data centers to chips. So all of that stuff is being built and immediately getting turned on. That's one thing I'd say. But it seems expensive relative to things that are growing slower or have less upside. In all the other sectors, valuations are not crazy whatsoever. Nubank has been compounding growth for, I don't know what it is now, 3 or 4 years since their IPO. And they IPO'd at $9 and now they're at $16, which is very healthy multiple. Banco Inter, very healthy multiple. Any name you look at that's public in general, regardless of sector, except for maybe, even NVIDIA, by the way, is not a crazy multiple on earnings, not on revenue, on earnings. It's like 30 times earnings or something like that, 30, 40 times earnings. That's not insane. So I think the market is working, and it's easy to believe it's not because you see, now $1 trillion is a number people talk about, and that wasn't true 4 years ago. People were not talking about $1 trillion. Now $1 trillion is 5 trillion, 4 trillion, 3 trillion. It's easy to use those words so things feel crazy, but it's isolated. A lot of the market is healthy. The private market where we invest is very healthy. Companies are not getting priced at crazy valuations. Diligence is taking time. You can learn what's happening before you put a term sheet. So everything feels not like 2021. 2021 was crazy, but this is different.
Great. I think we're getting to our time. Just one last question. We have bankers, we have microfinance institutions, we have regulators, we have fintech here. If you have to give a recommendation to the ecosystem overall, what it would be?
Exits. That's the only word I have.
I love it.
And the reason is, we don't talk about that enough. And I don't mean exits in the IPO or some other grand sense. I mean, like, sell your company, distribute dividends, Like get money back into the ecosystem, however you can. Don't say the word unicorn. Like if you say the word unicorn, you should owe someone $1 million every time you say that word. And we should just kill it and focus on exits. There's so many young, interesting teams that have built such interesting things that if you match them with a bigger company, it could be incredible. More of that M&A needs to happen. These large companies are facing succession issues. I'm sure the patriarch of Pick Your Bank would love to have some young startup founder of a fintech take over. It's the same person. The matriarch or the patriarch. It's the next generation of the same. But that conversation isn't happening. So I'd just love for there to be more M&A, more of these small $100, $200 million acquisitions that will solve every problem in every ecosystem.
Music to my ears, to IDB Lab and IDB Invest ears, I think. Thank you so much.
Thank you so much.
Fantastic talking to you.
Gracias.